Hey, this is Justin with DayTradeTheMarkets.com on February 26th, and I wanted to look at the Russell. We don't always look at the Russell, but I thought it was a good example today, and a lot of people do trade the Russell, of kind of a market that was a bit of a roller coaster ride, but by using some tools, you can actually make a little bit better sense of what is what is going on. With that said, I also wanted to remind you, if you haven't yet checked out the webinar we did last night, or the recording of the webinar, go ahead and do that. I'll put a link to that as well. So there is some time-sensitive information in there, so be sure to check that out if you are interested in those topics as well. But anyway, with the Russell, with any market, we always start with a bigger picture analysis. And heading into the day here in the Russell, our bigger picture bias was up. So that means, all things equal, we would rather be on the long side, okay? And the only way we'd want to get on the short side is if some really strong evidence came in to show that that would justify being on the short side. But all things equal, you'd rather be on the long side. And heading in bigger picture level, we were looking to be a buyer around 1170, which is right in here. And the market got within half a point of getting there and decelerated right there. So pretty good on that. That's just kind of your ideal spot for the day. So that's our bigger picture. That's the setting the stage, if you will. So again, bigger picture bias. And you can see this is kind of the first decision right before 10 o'clock Eastern. Can this market, does that support zone at 70 hold, or does the market pierce through there and maybe we have to adjust what we're thinking? But you can see that it decelerates nicely, starts to get some level one buying, and then we get our a pretty good commitment of a breakout. You can see so far in the day, the high of the day was right here, and we break out on the highs on this box, which is called a high velocity move, and then even more importantly, this level 3 or extreme buying aggression bar, and get some quick follow through in there. We get at some attempted reactionary selling, but you can see that is right into the high of this level 3 bar, which is what we call our continuation trade. And you can see that this is our only, so far after we've gotten this wave of extreme buying, this is our first attempt by the sellers to do anything, and they got no follow through lower. In fact, that decelerated and there's divergence on the very next bar. Then we break higher and make new highs on another level 3 bar, okay? And head higher, head higher, head higher, come back and test the support zone. Can't make these new highs. We have a bit of a double top, so that's intriguing. You can see we didn't make new highs. There's nothing really there. And then here's where the tide starts to turn. This becomes more of a roller coaster. You can see that we have this level 3 selling aggression bar here toward the high. So this is kind of confirming this failure to make a new high is legitimate, at least in the short term, and some selling has come in. You can see there's some follow through quickly lower. So this is at a minimum telling you that if you were still riding this wave higher, this is probably a good time to bail out of this trade if you were holding for a pretty nice, pretty sizable trade. And if you're a more aggressive trader, it's telling you that bears have certainly taken over in the short term. Now, you'd certainly want to be nimble in that situation because, again, you're fighting the bigger picture bias. You're swimming against the current, if you will. So if you are going to take a short trade, and there's evidence that would be the right side of the market at the time, you'd want it to go, we call it being nimble, but you'd want it to go in your favor relatively quickly. You'd want to be pretty tight on the stop, and you'd want to, manage that and be a little more tight with how you would get out of the trade. So the first sign of buying, like right in here, you may want to exit that trade. So you can see, again, a choppy day in a sense, or a bit of a roller coaster day in a sense. But when you add the bigger picture bias and you look at some of these extreme aggressions and the follow throughs, you can make better sense of what's going on in the day. And again, this is a 2-minute chart of the TF. You can use this on any time frame. We have people using this for micro scalping. We have people using this more for position day trading, even swing trading. So the logic is really the key here. So hopefully that makes sense. If you have any questions, let us know on that. And again, if you're interested, check out that webinar recording that we have, and we'll talk soon. Take care.